All right, what is up? Today is October 27th, and we lost around $499 in today's trade. Took just one trade and went off the markets. It wasn't looking really good. It was looking like a barcode, honestly. But let's review it real quick. So we were at all-time highs, and obviously, if you saw what the market did today, it opened and left behind this huge gap. So this is my main draw on liquidity for this week. So it's the one I also shorted targeting. So now when I go down to the 15, well, we had this 1 hour trace here lower, and now this 9 at 9, like we retraced lower as well, but I was still thinking that we could even continue lower. So now when I go down to 15 minute, by the time we were here, because I took the trade somewhere around here, let me open up ES. Right, by the time we were somewhere around here, you can see that ES was still lower, so which means that we had an SMT where from this high to this high. So with this SMT, I was pretty confident that the market could probably go higher. Now I opened up, when I opened the 5 minute, you can see it clearly, like from here to here. You can see that the SMT was still holding until we got stopped out. So what did I do? After seeing the SMT and the sweep and the fact that my drawn liquidity was lower, I anticipated a bearish move. So we have this gap here at 934. This was my first presented fair value gap. I don't mark it at 930. So here was the first presented fair value gap, and let me change the color to inversion. All right, it was the first presented fair value gap, but also an inversion. Now I think I saw it somewhere around here. Yeah, like the moment this kind of closed, this retracement here is where I took my short. And the short, I was targeting this 1 hour low, which was the lowest hanging fruit. And my stop was somewhere around there. And you can see market pushed really close to stop. Actually, my stop was a little lower, really close to stop. Went back into profit and goes directly to my stop. So this trade was a really good trade. I can take this a million times out of a million times. So it was just like a lesson. You can see, like, after this price retraces again into the first presented fair value gap, which was now as an inversion. So yeah, it happens. Just gotta accept the L. Now it was the inversion fair value gap model. Obviously this was I can rate it a 4. The reason I didn't give it a full 5 was because we didn't have a full clear draw on liquidity. Sorry, we didn't have a POI, so I would have liked to see a POI, not just shorting from all-time highs, which I think I'm gonna reevaluate with my trading, like not to short from all-time highs. So I added a couple of notes here, and yeah, it's just to review them and know what to change and what not to change. So as you can see right here from these charts, I entered here at this retracement, and then I got stopped out right there. So without delay, I think that's all for today's trading, and until next time, which is probably the next day, I'll do a trade recap. Stay blessed. Peace.